Reaching $100,000 in net worth is a significant milestone in your financial journey. But it's not the end, it's just the beginning. This is where the magic of compound interest starts to really work for you, and the decisions you make next can either propel you to $200,000, $500,000, or even $1 million, or they can stall your progress. The next phase is crucial. Let's dive into 8 essential strategies to accelerate your wealth building from this point onward. 1. Shift your mindset from accumulation to acceleration. Below $100,000, the focus is on saving and building a solid foundation. You're grinding out every dollar, and progress feels slow. But once you hit $100,000, your money starts working for you. For example, at an 8% return, $100,000 generates $8,000 a year in passive income. At this stage, it's time to shift your mindset from "can I ever reach financial independence" to "how quickly can I reach my next financial milestone?" This mindset change is crucial for accelerating your wealth. Start optimizing your tax efficiency, strategic asset allocation, and compounding velocity. Don't relax after hitting $100,000, intensify your focus. 2. Pay off high-interest debt fast. If you still have any high-interest debt, credit cards, personal loans, or anything above 6% interest, get rid of it immediately. The math is simple. If your credit card interest is 18% and you're earning 10% on your investments, you're losing 8% per year. That's a guaranteed loss that's much worse than any potential market return. Paying off this debt frees up cash flow and allows you to focus on building wealth. Financial freedom is easier when you're not shackled by debt. 3. Max out your tax-advantaged accounts. At this stage, you should be contributing the maximum to tax-advantaged accounts like your 401k, Roth IRA, and HSA. These accounts grow either tax-deferred or tax-free, which significantly boosts your long-term returns. For example, a $6,500 contribution to a Roth IRA growing at 10% for 30 years could turn into $113,000 tax-free. Compare that to a taxable account, which would yield only around $85,000 after taxes. The tax savings add up. Prioritize these accounts, even before taxable brokerage accounts, to maximize your wealth building potential. 4. Build a bigger emergency fund. Once you hit $100,000, upgrade your emergency fund. If you've been keeping 3 to 6 months of expenses, it's time to increase that to 6 to 12 months. A larger emergency fund gives you the flexibility to weather market downturns, take career risks, or pursue entrepreneurial ventures without financial stress. The peace of mind this provides will help you make better financial decisions. Ideally, keep this emergency fund in a high-yield savings account, earning around 4 to 5%. 5. Diversify beyond stocks. If you're still 100% in stocks, it's time to consider diversifying. With $100,000 in assets, you have the capital to spread your risk. Consider adding bonds, real estate, or even REITs, real estate investment trusts, to reduce your portfolio's volatility. You can still maintain strong returns while minimizing risk. The key is balance. A more diversified portfolio can help protect your wealth during market crashes and still capture gains when the market is doing well. 6. Resist lifestyle inflation. This is one of the most powerful yet difficult strategies. Many people hit 6 figures and then think, "I've made it, time to treat myself." The people who build wealth long-term don't fall into this trap. They resist lifestyle inflation. Instead of spending raises, bonuses, or tax refunds, redirect that money into investments. If you've been saving 20% of your income to reach $100,000, bump it up to 30% or more. The key to wealth building is saving and investing, not spending. Every dollar spent on lifestyle upgrades is one that can't be invested for future growth. Remember, delayed gratification now leads to exponential wealth later. 7. Invest in real estate or alternatives. With $100,000, you can start diversifying beyond stocks into real estate or other alternative investments. Real estate, for example, offers leverage, tax benefits, and inflation protection. Buying a rental property can be a smart way to build wealth, even with a relatively small down payment. You could also consider private equity, angel investing, or even starting a side business. The goal is to create multiple streams of income that don't all correlate with the stock market, helping to reduce overall risk. 8. Automate your finances. Automation is one of the best tools to ensure consistent wealth building. Set up automatic contributions to your 401k, IRA, taxable brokerage accounts, and even your emergency fund. Automate bill payments and create systems that ensure your wealth building is the default, not something you have to think about every month. Automation eliminates emotional decision-making, which can derail your financial progress. Plus, it ensures that you stay consistent, which is key to benefiting from compound growth over the long run. Final thoughts. Reaching $100,000 is just the beginning. It's the foundation upon which your financial empire can be built. The key to accelerating your wealth from here is making strategic, intelligent decisions. Avoid lifestyle inflation, maximize tax-advantaged accounts, diversify your investments, and automate your finances. Most importantly, continue to educate yourself and invest in both your financial and personal growth. These decisions will set you up for exponential wealth growth. Start implementing these strategies today. Pick just a few to focus on, and begin taking action this week. Whether you're aiming for $250,000, $500,000, or $1 million, the path forward is in your hands. Take control, execute these steps, and watch your wealth compound over time. If you enjoyed this video and learned something new, hit like, subscribe, and drop a comment.